or proposed merger of the Newcastle Permanent and Greater Bank. Why, putting this topic together, we became aware of the proposal and thought this is something that the public needs to hear about. And to say that these are institutions that are valued and much loved would be a great understatement. For me, and sorry Wayne, you're going to be disappointed, but I think when I was 12, I realised that my bank account in the ES&A Bank paid very little interest, and the bank closed at 3 o'clock. And there was this little institution down the road called the Newcastle Permanent, sorry. And I went in there, and all of a sudden I had to fill out a form, and I became a member of the Newcastle Permanent, which I thought, oh, what's all that about? With one vote. And I could put my money in there, and I got more interest, and that was very good. And then some years later, in 1990, 1991, when it was newlyweds in our house and interest rates going up, one of the memories of that time when things got pretty pricey, even on a house of $178,000, it's laughable now, isn't it? But the letters from Mr. Wotherspoon, every time they raised the interest rates, really did make you feel good. Even if it was painful, they really made you feel that they cared. And so, a merger of these two institutions is something that should be and is of great interest to the community. Anyway, putting this event together tonight, we thought we should start, and this is an independent organisation. We haven't had any sponsorship, and in fact I gather it would be against your policies anyway, but which is a bit of a shame. But we thought it would be of interest to have an independent perspective on the changes that are going on in the world of finance. And so we have our independent expert on that, who is Professor Dewan Lee, is Professor of Finance at the University of Sydney Business School, and his research area is in corporate governance of financial institutions, so exactly what we're talking about tonight. But we've asked Dewan to give a brief explanation for those of us who don't understand all the complexities of finance about what is going on in the world of finance and why it's changing in Australia and indeed internationally, and what are the forces driving the sort of changes that we're going to hear about tonight. So that's Dewan. And then I may as well introduce all three speakers now. So our other two speakers are closest to me, Wayne Russell, who's the chair of Greater Bank. He comes from a background in auditing and assurance services, had a long experience in that previously with PricewaterhouseCoopers and Pitcher Partners, and he also serves on a number of boards in charitable and non-for-profit and faith-based sectors. Jeff Ether, furthest from me, is the chair of the Newcastle Permanent Building Society. He's an accountant with long experience in that world. He's previously had quite a long role as CEO of NBN Television. Has been chair of the University of Newcastle Foundation and deputy chair of Hunter Water Corporation. So we've got three stellar speakers tonight, and I think it'll be a very interesting discussion. Thank you. Dewan.
Thank you very much, Ross. First of all, I'd like to thank the Newcastle Institute in sponsoring and organizing this public debate. The aim for my 15-minute presentation will be to provide you some historical background of the Australian banking sector, but also potentially explore one of the reasons why we have been given this proposal for the two banks to merge. Before I go into the Australian banking sector, the history of it, the best way to categorize how the banking sector works in Australia is a competition between the Big Four and the non-Big Four. And before I go into more details, I want to first put down some ground rules, which is the terminology banks is only used in common sense, because the formal terminology for any financial organization that receives savings from customers, then redistribute that money to loans in the form of business loans or in retail individual loans, is called an Australian deposit-taking institution, which is supervised by APRA. And that terminology is quite important in today's discussion because one of the banks today is actually the Greater Bank, classified by APRA as a bank, but the other organization is still a permanent building society. So we'll deal into more details about what has happened there. But that sort of complication does explain the history of Australia's banking sector. When do you think the first bank was established in Australia? Would it have been 300 years ago, 1,000 years ago, 100 years ago? 1812, very good guess. It's 1817. It was Bank of New South Wales, which is now known as Westpac. And does anyone know why it was established back then? Well, the governor at that time, Governor Macquarie, he was organizing a lot of construction in the colony because they needed to connect things like the city of Sydney, the town of Sydney needed to be connected with town of Liverpool in 1813. That's around 30 kilometers away. So they needed a lot of people to provide labor. And at that point of time, the colony did not have a coin or a note under the colony's name. So the form of payment to the laborers was actually rum. It was 400 barrels of rum that is recorded as payment for the whole construction of a 30-kilometer road. Now, why that's interesting is that I worked, let's say one day, I get a bottle of rum. I have plans to buy 2 hats tomorrow to go to the market. I wake up the next morning, only half a bottle remains. Right? Once you start consuming, your purchasing power starts to decrease. And the governor realized there's no way for the economy to grow in that situation. So that's why he set up the first bank in 1817. And from then onwards, multiple banks started to appear. And the sole reason was the gold rush. People needed to put their money in there, get a promissory note saying that you have deposited this amount of gold with this bank. But at that time, there was a little bit of complication because they needed a bank which holds savings from customers, another bank that specializes in trading of these commodities, and another bank, which is the quasi-bank, providing loans to individuals like us to build houses. And the reason was the typical saving and trading banks, their fees were tremendous. Normal people like us could not pay for it. So this quasi-banking system started to exist around the early 19th century. So if we go back a little bit more to 100 to 200 years ago, all the big 4 banks, CBA, NAB, Westpac, ANZ, have all been established prior to 1911. There has been a substantial growth in the number of banks from 200 years ago to today. But where I want to focus a little bit is this customer-owned ADIs. Now, the customer-owned ADIs are very simple. Customers, like as Ross said, when he joined one of the banks, he had to sign a document becoming a voter and a customer. So a customer-owner bank means that a customer provides the deposit, and the deposit is provided as loan to the customers themselves. And the customers become the shareholders who vote on the strategic decisions of the bank. Because of this alignment of the customers and the owners, the overall regulations surrounding these entities have been much less stringent than a typical bank. A good example is the Permanent Building Society. Why it was so important in Newcastle? Well, we're in Merewether, right? Merewether in 1910, it was a swamp. There was nothing here. Around in 1920, that's when most of the houses was built. My house is 100 years old in Merewether, built in 1927. And the original owner had to go to a Permanent Building Society, become a member, and ask for a loan. And that is why the Newcastle Permanent was established in 1903 in Newcastle, and the Greater was established in 1924, during the time where there was substantial growth in the Newcastle area. Okay? How important were these? Well, these non-bank ADIs provided almost 2/3 of the overall personal investments made between 1870 to 1890. In 1978, the number of building societies across all of Australia peaked at a number of 153. Another form of customer-owned is credit unions, like the police credit union or the teachers or nurses credit union. They have to become a member, where the profession defines them as a potential member. Those numbers were maxed at around 400 different credit unions in 1985. But things change. You can see from this graph, which I picked from the US, it was a very similar story. A lot of the banks existed in the US. There was a huge decrease in the number of banks around in the Great Depression. That's the huge drop there, and then it went back up. And after the Second World War, the number of banks stabilized. It stabilized until 1980. And then look at what happened in the graph where the arrow is. From 1980, the number of banks that started to disappear each year in the US is 1,000 banks per year. 1,000 banks are disappearing. And the main reason for that is the US government and a lot of the developed financial markets decided to integrate. In a very simple explanation, what they did was they opened the financial market to foreign entities. So for example, prior to 1980, no foreign institution can become a commercial bank in the US. But after 1980, any bank could come into the US and any bank in the US could also go overseas. What that meant was tremendous new incomers were coming into the financial market and more competition was happening. Those who had enough margins and was enough of size to compete survived. Those who weren't started to be taken over. And that is why there was a significant increase in the disappearance of the banks. Now that's not too far away with what happened in Australia. If you recall back in 1983, something significant happened in Australia. In 1910, the Australian pound was introduced, which is the first formal currency for Australia. Then around in the mid-50s, 60s, it was changed to the Australian dollar, but it was always fixed with the pound. You might recall that when you were going to the UK back in the 60s, 70s, it was easy to transfer over to the currency because there was a fixed conversion rate. But from 1983, the then Treasurer Paul Keating changed it into a floating rate, meaning that Australian financial sector was now open to foreign entities. And as soon as that happened, people rushed in. All the financial institutions around the world started to come in. HSBC, ING, Citibank, you name it. They started to open branches. They started to open banks here. As of today, there's 127 banks and ADIs operating. Around half of them don't provide personal loans to us. So they're only commercial, and most of them are foreign banks. Okay? So what happens? More competition coming in. The government started to realize, well, this is going to be bad for our financial sector. Our financial sector was closed for 180 years. We suddenly open up. They're going to be vulnerable. We need to bring up the strength of the competitiveness of our local banks. So what they did was they introduced new rules, such as deregulating, where customer-owned building societies can now transfer to a full bank, but they needed to demutualize, like what NIB did. Essentially meaning that from a customer-owned entity, they have to privatize the company and change to a shareholder-owned company. That's St. George, Suncorp, and Bendigo Bank. High cost, long time in the process. But it does help a lot of financial institutions turn into a big banking organization. Another thing that happened was the foreign entities coming in wanted to have a presence in Australia by merging pre-existing banks. And the government realized that they needed to protect the sector. That was the introduction of the 4 pillars policy, which essentially says the big 4 banks cannot be taken over by foreign entities. But while doing that, they also put in a rule that the 4 banks can't merge with themselves to create a mega bank which could monopolize the overall financial market, right? The last thing that I want to mention is that around mid-90s, the government went a little bit more to make all of the ADIs become a little bit more competitive by decreasing the favorable tax given to mutual incomes and also increasing other loan providers, non-ADI. So these are entities that don't receive any savings from customers, but they were able to provide loans through their services, like loan brokerages. And that effectively meant that there were more fierce competition introduced into the mid and small side customer-owned regional banks. Once these competition was introduced, the CEOs started to realize that their market share was dropping, and it dropped significantly. If you look at the left-hand side, that was 1985 when the financial sector was starting to open. You can see that the building societies was responsible to around 20% of the total household loans provided in Australia at that time. By 2025, which is the right-hand side, which is cut off, it had dropped to 2%. So it dropped to 1/10 in 20 years. And at that point, the big fours dominated the household loan market. Decrease in margins, because no longer the market share is there, meant that for these firms to survive, they needed to merge and become bigger entities, have economy of scale, which meant that there was an active M&A activity between a lot of the CEOs. And indeed, by 2005, the number of CEOs that was in 1985, it was around 500 different customer-owned entities, dropped to 161 in 20 years. And as of today, there's only 58 customer-owned institutions and only one remaining building society, which is the Newcastle Permanent as of today. Right? So size is definitely an important matter for these banks to continue to survive. But is the end of the game, meaning at the end of the day, is all of the CEOs going to merge? Especially, are the big fours going to take over all of the customer-owned entities? The answer could be yes, because the four-pillar policy has a lot of restrictions, but does not restrict the big fours from taking over regional banks. That's very interesting, because the big four banks were very aggressive. They wanted to expand their business from 1985 to 2005 and went on to merge with regional banks, like Westpac took over Bank of Melbourne to have a bigger presence in Melbourne by taking over a pre-existing well-known bank. All the big four banks did that. So is all of the rest of the 58 remaining customer-owned to be merged? Things didn't work that way. You might recall around 10 years ago, Wayne Swan did a news article saying that the greedy big four deserve a backlash. And the reason was very simple. Once the big fours got a 95% market share, when the RBA, the central bank rate, started to go up, they increased it a bit more, charging a bit more to the customers. Where did that money go to? The shareholders. When the RBA started to decrease their rates in 2011, they decreased a little bit less. Where did the income go? To the shareholders, not the customers. Right? So there was a huge negative sentiment of the big fours, anti-big four movement at that time. And it was a great time for the customer-owned regional banks. They found that this is the time to convert into a full bank, and the government helped. They took away the demutualization requirement, saying that any ADI, non-bank ADI, can now become a bank if they want to, as long as the customers vote on it and say yes. And starting from 2011, 30 mutual banks was established, all of them originating from a credit union or a building society, right? And because of a lot of the mutual banks turning into becoming more visible and rebranding themselves as a major bank, the market share has substantially gone up from 5% in 2005 to approximately 25% now, is now owned by non-big four customer-owned ADIs. So there is a significant growth there. You can see from this table that the big four banks are up there. From the big four onto the big 12, it's mostly foreign entities like ING, there's Macquarie Bank there as a top 5. But from Greater Southern Bank down to the Greater Bank, that's the top 20 banks in Australia. Those are the top 10 or the top 7 customer-owned entities. Newcastle Permanent is the second largest in terms of total assets and of loans, and that's the most recent data available from APRA as of today. Greater Bank, in terms of total assets, is top 7. Household loans is top 10. Once the merger is approved, they'll move up to become the number 1 or the biggest customer-owned ADI in Australia. So what happens from now? In the 2021 report by KPMG, they say that consolidation within the sector would continue, where the larger banks would continue to try to merge with the smaller bank. For example, one of the banks that was previously a customer-owned bank had to merge with 72 different customer-owned entities to become a bank now. So there's going to be more aggressive acquiring behavior. However, interstate mergers, which means that one bank, for example, from New South Wales is trying to merge with another bank in Perth, in Western Australia, doesn't necessarily always satisfy the customer's needs. For example, in the US, from 1980, there were 14,000 branches across the United States. But as the massive merger started, the number of branches has went down to 4,000. That's a 72% drop in the number of branches across the US in 40 years. That's a massive drop. So thereby, one of the key important things is to have a financially stable and a large enough entity, financial institution within the region who can fend off any potential acquisition from foreign forces or other big banks nationally that will continue to serve the regional demand. However, there is a key point that we have to remember. As customers and owners of these potential two banks, what will happen is once they merge, there might be a decrease in competition. So as shareholders of these banks, we have to be diligent in trying to monitor the overall operation to keep on maintaining the customer focus of the two banks. Right. Thank you very much.
Thanks, Dawn. Sorry, I'm still trying to process those numbers, the size of the banks relative to the building societies. I'm sorry, Jeff and Wayne, you're minnows. Gosh, yeah. Anyway, thanks for that. We'll hold questions until the end. Wayne, Jeff, you can toss a coin, or would you like to do it on online?
That's well, thanks very much for that, Ross. And if all else fails, turn it on.
Yep. Okay, we're right now.
All good. All right, thanks very much, Ross. And, you know, I was just reflecting on something you said right at the start. If you got a letter from Frank Wotherspoon that increased the interest rates and you felt good about it, and this is you were a borrower, I'd suggest if you've still got that letter, you could sell it to the banks and you could make a substantial amount of money out of that, because I think they'd probably want to get their hands on it. But look, thanks very much, ladies and gentlemen, for the invitation to talk to you tonight. And like Ross did at the start, I'd just like to do an acknowledgement of country on behalf of Greater Bank and Newcastle Permanent. So I'd just like to acknowledge the traditional custodians of the land on which we gather, the Awabakal and Warramai people, and pay our respects to elders past, present and emerging. We extend that respect to Aboriginal and Torres Strait Islander peoples here this evening. So just as Ross said right at the start, my background is audit. My professional qualifications, I'm a chartered accountant. and my specialisation was in audit and assurance. I actually started my days with Coopers and Lybrand, which became PricewaterhouseCoopers. And as part of the industry groups that I was auditing, as Dwan said, I was actually, one of those industry groups was credit unions and building societies. And I was doing quite a number of those, so that was one of the industry groups that I was auditing, and I quite enjoyed it. And one of those was Greater Bank, and at one stage I also had the pleasure of auditing Newcastle Permanent. And at another stage of my career I was actually auditing NIB as well. So I've actually had the privilege of auditing over those years a number of great institutions in Newcastle. It's interesting, people often say, how do you define an auditor? And one of the best definitions that I ever heard was, somebody said to me once, you know, Wayne, auditors are like a person sitting at the top of the hill watching a great battle rage down below. And then when the battle's over, they go down to bayonet the wounded. So if you, so there's a bit of an insight into what you do as an auditor. So it was because of that background in auditing that, and auditing financial institutions, that I was invited to join the board of Greater Bank. So why are we here? We're here tonight to talk to you about our merger plans. The background to the merger, it was probably 2 years ago now, Jeff. Jeff and I knew each other. It's a story for another night, but I actually also audited Jeff when he was the CEO of the NBN Group. So I suppose one good thing about audit, you get to meet a lot of people over the years, and you make a lot of friendships. And I knew Jeff, and I've known Jeff for many years. And Jeff will probably be even able to tell you stories that go back even longer than that. But let's just stay with, that's how I first met Jeff. And we used to catch up from time to time, and we would talk about industry issues. A lot of what Dwan was talking about, the challenges that the industry faces, you know, with declining margins and all of those sorts of things, and the pressures that are on the mutual space. And the more that we talked about things, the more that we realised as two organisations we actually had in common. We all very much customer focused. You know, the customers were absolutely of paramount importance to us. So, you know, as we went on and talked about things, we realised we had all these things in common. And we thought, you know, with the challenges that the industry's facing, that consolidation and all the rest of it, you saw from Dwan's numbers that he put up there, the market share that the major banks have. And so the more we talked, you know, we thought, you know, there's a lot of good things here that, as with two respected organisations in the Newcastle region, by coming together we could become something that's bigger than what we are. So in other words, the whole would be bigger than the sum of the parts. And that's really where we first started. And the more we talked, then we got, our management teams got involved, and they also realised that this was something that was good for the region, good for our customers, and good for our business. So after a period of time, we actually signed what we call a Memorandum of Understanding, and we signed that in August 2021. So this is how far this, you know, the conversations go back and the process goes back to. After that, after we signed the Memorandum of Understanding, we then had conducted a comprehensive due diligence process. So what that involved was each organisation looking at each other and to the extent that we could with all the various competition laws and things like that. But we had a good due diligence process, and the more we went into that, the more we then realised that this was probably a good union to proceed with. So as a consequence of that process then finalising, we then signed a merger implementation agreement, and that was announced in early 2022. So here we are now. There is soon to be released a bunch of information out to our customers, and that will explain in a lot more detail the reasons for the merger and the benefits of it. And after that, we then have a vote which is coming up in November, we hope, and that's a fairly momentous occasion for all of us. Both boards unanimously endorsed the merger proposal, and that's part of what we're trying to do here tonight, to explain the reasons that that both boards unanimously endorsed that proposal. Somebody said to me, "What's the vision of the new merged entity?" And we're actually still developing that, because we're still two separate organisations. But you know, one of the things that we have a number of common principles, and certainly the vision that we have is that the customer will be first and foremost in everything that we do. One of the things that is vitally important to us is that we remain relevant. As Dwan has been talking about, one of the challenges in the financial services sector is to remain relevant. And it applies actually to any business, because if you're not relevant, what happens? Your customers will go to someone else who is relevant. So the challenge is to remain relevant and give your customers the services and the products that they want. And as when we look at the customers that we have, this is one of the challenges the banking industry faces these days. You have a very broad cohort of members and customers, and trying to satisfy all their requirements. Some of the things, though, when we talk about vision, as we go forward and as assuming the merger proceeds, which we hope it does, you know, some of the things that we'll be wanting to talk to our members about is telling them how we've succeeded in our strategic plans. So we'll be talking about our customers, our particular brands. We've already announced that we're going to maintain the two brands, so the Greater Bank brand and the Newcastle Permanent brand. You know, both entities have made significant investments in technology, and so we want to report on that. We'll certainly look at how we're able to grow and leverage our business to the benefits of our customers. So it's all those sorts of things that, you know, will form part of our vision and how we report to our customers going forward. So I might at this point just pause for a moment. I'll hand over to Jeff. He can say a few words, and then I'll come back and say a few more.
Thanks, Wayne. And again, thank you everybody for coming along tonight and giving your time up. Dwan's done a great job in setting up the context of the merger, and in, you know, much of what he presented tonight formed the basis of the business case, the very detailed business case that was developed by our organisation and the Greater as well. So I just wanted to touch on some of those points in a little bit more detail into the things, and a little bit more focus on probably the modern history, the last couple of years, that have influenced our decision and our business plans. So over a long period of time, it was pointed out that there's been major change in the industry and major competition in the industry. But in the last 3 years, if you consider what happened with the Banking Royal Commission, followed by COVID, followed by the introduction and taking to market of what we call fintechs, the market has changed radically in a really short period of time. And the Banking Royal Commission, which was set up because of the poor behaviours of the big four banks, the outcomes of the Royal Commission are a load more regulation, a load more governance, a load more checks and balances, but all of that's been applied to every financial organisation regardless of size. So despite the fact that customer-owned organisations were not a part of those poor behaviours, we put our customers first, we don't put our shareholders first. All of that same regulation is applied in the same way as it does to the Big Four, has had to be applied to us. So customer-owned organisations have had to uplift their cost, their staff numbers, their capability levels around risk and compliance and governance areas to meet these requirements. So these aren't customer-facing areas where you get a return on investment, some of the in accountant talk there. These are actually more costs to the organisation without any return at all. Now, they're a good thing. They're a real good protection for customers. So they're a good thing to be done, but they favour the big four in terms of the size and scale they've got. It's a drop in the ocean for those guys. For us, it's a major investment to invest in that uplift in capability. At the same time, we've had COVID. So what has COVID done? It's kept people at home. It meant people couldn't go to branches. So whilst there was already a new generation of younger people who are using their phones to do all of their banking, they don't want to see a person, and they don't. They could go online and do all of their banking. That accelerated, and we were training, older people. My 94-year-old father has been trained how to use an app now and do his banking because it became really important for them. So we have a generation who accelerated that uptake of technology, and also this younger generation are driving. They're digital. They're all digital, and they want innovation on their app. They don't just want to do the basic things. They want more out of their app as well. So technology is now driving, and we need to keep pace with that. And then thirdly, we had these fintechs. These are the new startup banks who are offering loans to customers without any branch or any personal interface. They created an app, and young people could go on there, fill out a form, and in some cases they could get a loan approved in 9 minutes. Now, that market has developed to almost, we estimate next year, around $100 billion is coming out of the home loan market in the fintech area. So these are digital mortgage. So again, you look at that development, it's taking some of the market away from us, and what we need to do is obviously play in that market as well. So all of those things are really important, and they benefit the customer, and particularly younger customers. We have to be able to compete. We have to be able to invest in the technology. We have to be able to compete with the likes of a Commonwealth Bank, who have, you may have seen it in Darling Harbour, this beautiful building which houses their technology department. They have more people in their technology department that we will employ in our total merged entity. There's around 1,600 people sitting there, and they're working on their technology each and every day. That's what we've got to compete with. So every day when our people go out, or people walk into a Newcastle Permanent or a Greater Bank, we're competing with the Commonwealth Bank. We're competing with the might of that big four. Every customer we win from that big four. Every customer we keep from that big four. So, those big behemoths who control 80% of the market are who we compete with each and every day. So there's a real imperative and a requirement for us to keep growing the scale, which is the size of our organisation, so that we've got the depth of our money to spend, our investment money to spend on technology, that we've got sufficient funds to be able to spend on upgrading governance, that we've got sufficient money to spend to make sure we remain, in Wayne's words, relevant to our customers. And that's not a do something once and walk away from it for 5 years. Because as you've all seen, digital technology changes every day. There are kids out in garages working on digital technology and these new wham-bam things that are going on phones, and they introduce, and all of a sudden the market's moved and you've got to go, well, where's our customers going? So this is really dynamic. So those things are a real imperative for us. So hopefully that's a little bit of detailed context of why the last 3 years has made the customer-owned industry, and in particular the Greater and ourselves, take a very hard look about our strategy. And our strategic plan 5 years ago did not contemplate this. This started 3 years ago, and we need to have a real rethink, take in expertise, the likes of what you heard tonight, to understand the market, understand where it was going, and then form our view on what we need to do, and then form our view on how we best do that. So as Wayne spoke, when we started talking 2 years ago, the first thing we spoke about when we moved into merger talk was this would be a strength-to-strength deal. So a lot of people think of M&A activity, merger or acquisition activity, where a strong company or a big company buys a weak company and says, let's take it on, and it's got some challenges, but we'll be able to do things to it to lift it. This is actually two strong customer-owned organisations coming together at the peak of their powers. And that's a really good thing, because that means we can focus our energy on growth, not on fixing something that's a problem. So tick number one, this is strength to strength and really important from that perspective. Both organisations are high achievers. We both punch way above our weight in terms of the national marketplace. Both the Greater and Newcastle Permanent would have a list, and you'll read our annual reports coming out shortly, even next week, I think, and you will see a multitude of national awards, so national awards for best customer service, for best products across the whole of Australia, despite the fact we only operate in a small geographical area of New South Wales and southeast Queensland. So despite that, we provide a level of service and a level of product that is best in market on a whole range of things. So that's both of us. The last 3 years, Forbes, who does a world's best bank report, and they go all around the world and say, these are the best banks in this country. Both the Greater and Newcastle Permanent have been in the top 5 banks in Australia for the last 3 years on the Forbes report. Again, despite the fact we operate in a small geographical area. So when I say we are both high achievers, we both do what we do and service our customers really, really well. And we don't beat our chest a lot because we're from Newcastle. So, you don't stick your head up too high, but we know everybody's proud about that. And that's something that's really important. And so for us, this was about, when we talk strength to strength, how do we keep that? How do we not just keep it, but how do we build on it and take what we do and the goodwill we've got across a broader market? So people in Western Australia now look and say, wow, look at these two organisations. How do I be a member of that? Well, you can't at the moment. So for us, when we're talking about scale, we have put the merger together, put these two great organisations together, and then let's build on that. And when we say build on that, we want to build on that out of Newcastle. So this is about maintaining what we call a financial powerhouse, or creating a financial powerhouse by putting these two great organisations together, keeping them here in Newcastle, where we get to control our own destiny. There are those, as Dwan said, there are those in the marketplace who haven't contemplated this as yet. Some of the smaller customer-owned who are carrying on. If they don't merge, they will die. That's the reality. And you start to see some of those numbers and understand that they just will not be able to provide the level of service, the level of governance that is required from them, and they're not going to be able to compete. So again, if you think of what do we mean by compete, we would both say if you checked our rates today, the big behemoth that is the Commonwealth Bank, both the Greater Bank and Newcastle Permanent would have a better 12-month term deposit rate for our customers than you could get from the Commonwealth Bank, and we would have a better home loan, variable home loan rate than you could get from the Commonwealth Bank. The only way we can continue to provide that is making sure we've got that financial strength. And that's the background as to why we're talking about merge. Wayne, do you want to pick up the next bit?
Yeah, thanks, Jeff. And you touched on a number of things there that are really, really important. And so I thought I might just talk about some of the benefits of the merger that we've been thinking about. And as Jeff said, this is our choice to change. Jeff touched on a lot of the smaller institutions, the pressures that they're going to face from a regulatory perspective, or having to invest in technology to keep up with those sorts of services and products that customers demand. It's just going to be too much for them. They simply won't have the resources and the financial clout to be able to do it. So by acting now, we've got the opportunity to chart our own course and to choose our own future. Jeff, he's made the comment about creating a financial powerhouse for Newcastle. You saw the numbers up there relative to the majors, and we're not fooling ourselves. But by bringing the two organisations together, it does become a substantial and significant organisation in Newcastle and the Hunter region. With the two entities combined, we'll have approximately 20 billion in total assets and a combined customer base of approximately 600,000. Now, when you think about that, you know, for two organisations that started off as cooperatives to help everyday Novocastrians buy a home, that's not bad. And I think, Jeff, that's actually the strapline of your latest thing, isn't it? That's not bad. So I got. Did you like I put that in? So some of the things, some of the commitments that we've made around this merger, we both said, and as you know, we're both proud mutuals. That is, we're owned by our customers. We don't have shareholders, and therefore we don't have that sort of natural conflict of interest that the big majors have, where they're trying to serve their customers and shareholders by way of dividends, and particularly the listeds where their focus is on the dividend part. As we've said, we are committed to mutuality, and that's not going to change. One of the things that when Jeff and I started talking, that was an absolutely fundamental tenet for both of us, that we were both absolutely committed to the mutual space, to the mutual model, and that is that we're owned by our customers. We've said that both brands, and I touched on this earlier, that both brands are going to remain. So people and our customers can do the banking as they do today. We know some people prefer to deal with perhaps Newcastle Permanent, and others prefer to just deal with Greater Bank. By running the dual brands, people will still be able to do that. So whatever way you prefer to do your banking, you'll be able to do that in the future. Branches remain critical to our future. We've made a commitment. There'll be no branch closures for 2 years, and that's important. For our people, as we bring the two workforces together, we've also committed that there'll be no forced redundancies for at least 2 years. Our headquarters and our call centres So I'm happy to do it if you want, Ross. But
there will be formal time for questions at the end. Oh no,
Yeah.
there'll
and
definitely be time.
if you like, I will come back to that at the end. So yeah, I will make sure we cover that. Our headquarters and our call centres will remain locally based. And you know, people have often said, well, what happens if we don't merge? What happens if you don't do that? The industry, as we've seen, as Dwan's talked about, you can see how rapidly it's changing, or how it has changed over the years, and how that pace of change will only continue. If we don't merge, because of the pressures that we've spoken about and the way customer preferences are changing, both organisations will have to look at other options. Because, as Jeff has touched on, competing with the major banks, not changing is not an option. When we looked at other partners, and we have looked at those, the other partners or the attractiveness of those other partners were not as compelling. In many respects, they would be outside our region, and that would, or even they'd be in others, potentially in other states. It would mean our resources would be spread between regions. The jobs would then be spread between regions rather than concentrated where we are now. And the community investment that both organisations hold so near and dear to our hearts would then be spread elsewhere. So that's, you know, some of the features that why we, where the benefits are, the commitments. I will come back to your question, Madam, about the branches, because it is an important one. but I'll come back to that at the end of the presentation, if that's okay.
Thanks, Wayne. So just picking up on that point about others. So Dwan picked up on, there are a number of mergers that have taken place. One of those, probably the most recent, was Banana Coast Credit Union, who are based out of the Mid-North Coast, so Coffs Harbour, and they merged with people and nurses who are based in Perth in Western Australia. And Dwan talked about, well, how does that work? It's not an easy fix. They've shared some technology, but the benefits of people growth, of investment, is all happening in the West, and it's not happening in their base in Coffs Harbour. Running parallel to our merger process, we have Heritage Bank and People's Choice Credit Union, who are also a similar size. When we put those two together, they will be very similar in size to our merger. Heritage Bank is 160 years old, I think, Dwan. They're older than us at the Perm. They're based in Toowoomba in Queensland, so started in the Darling Downs. PCU are based in Adelaide. So you've got these people going for scale and size because they have to, and they're stretching between Toowoomba and Adelaide. Now, trying to make that work is going to be really difficult, trying to spread their focus, their future investment, where they base head office jobs, how all of that works is going to be quite disconnected. And we wish them well with how they're going to go with all of that. It's not an easy fix, but it's what they have to do. But when you look at that and compare that to what we're doing, you can see how compelling having two organisations whose head office is a couple of kilometres away from each other, and two organisations that are at the peak of their game, who are high achievers, who are already achieving great things for the community, have already got that sense of the hunter embedded in their DNA. Both organisations have that. We don't have to convince other people from somewhere else about how good this region is. It's already there in both of us and we know it. We don't have to convince people about the $4.5 million each year the two organisations provide to community organisations in this region, many of whom would not survive. They would not survive without the support of our charitable foundations, both the Greater and Newcastle Permanent and the great work they do, and with our corporate donations and community support programs. Those things would be splintered. What we're talking about is putting something together, grow it out of Newcastle, take on Australia, make it bigger, but out of here, and that means we can do more. We can do more of what we do really, really well. We can do more of it here, because this will be our base. Newcastle as a base, we're back on the map again. There is no doubt the Hunter region, everybody's talking about the Hunter region. Our GDP coming out of Newcastle last year is around $60 billion. That's bigger than the Northern Territory, it's bigger than Tasmania, it's bigger than Canberra, although I don't know whether, does Canberra actually have any GDP, does it put anything into the economy or does it just drain it? I don't know. Maybe a poor comparison, Canberra, but anyway. So we're a big region, and the new ways of working post-COVID, where people are now finding that they're looking for lifestyle, that they can work in an office maybe a couple of days a week, they can do their jobs from home. All businesses have found an effective way to make that work. So our people can be are adaptable, the organisations are adaptable, and people now from Sydney are looking and going, wow, Newcastle, how good does it look? Because it's a great place to live, and now it's also a great place to work. If we build a financial powerhouse, the words we used before, based here in Newcastle, we will attract great talent. We will provide the growth opportunities for our people as well, so they don't have to go off to Sydney if they want a career with a big financial institution. They can have that career here. So these things are really, really important to us, and they are an important part of the things that we're already working on. They are a part of what we're planning out now. It's not just put the two together and then off we go. We have a really aggressive growth strategy. We have great opportunities to take significant goodwill that already exists because we win awards in Australia, right across Australia, and take it to the rest of Australia and offer that great products, those great services that we already provide. The stuff that we do really, really well, we have an opportunity to grow if we're together. So we think it's really important, not just for our own organisations, but this is a great thing for the Hunter as well, to have a very large financial institution to be. We've called this Project Beacon from the start, and we called it Beacon because we want to be the beacon for the customer-owned industry in Australia. That's what we want to be. We want to be what everybody looks at and says, wow, look at those guys. We want to be like them. Or some of these smaller guys can say, how do we join with you? Because you do all of the things that we think are really important. So a little bit more context there as to why we think this is not it's so good for us, but also so good for the region. Wayne?
What I thought I might do is just conclude with just talking a little bit about the future of customer-owned banking. Collectively, customer-owned banks form the 5th largest retail banking group, I suppose, in Australia, with assets over 150 billion. They manage more than 10% of retail deposits, and we've got more than 4.5 million customers. That's in the collective mutual customer-owned space. And there are many people who still want an alternative to the big banks, and that's what we're all about, by providing that alternative. And by merging the two organisations, Greater Bank and Newcastle Permanent, we can ensure that we're here for those customers and here to provide that alternative for the generations to come. The increased size also brings increased responsibility. The things that we talked about, our commitment to our communities, they're the sorts of things that we consider by coming together, and that community responsibility that we have in the areas in which we operate. So if we act now, we'll continue to be leaders in this space, and we'll be in a position of strength that Jeff's talked about to continue to take up the industry consolidation opportunities that will emerge in the future. So what are the next steps? In the coming weeks, you can expect to, for the members, and all of you are probably members at least of one institution, and maybe even both, you'll get some key information in our merger information booklet, which will talk about the merger and the open and how the voting is open to eligible members and how to vote. And you can see from Jeff and I that we're pretty excited about this merged future together. Jeff's touched on about our plans to grow both brands, and that's again a key focus for the organisation. About the opportunities to move into the new markets, and that's how we can do that by investing in our new technology platforms. And also then to help Australians get into not only just homes, but also to help them with their overall banking, that they want to do. This is a pivotal moment for both our organisations' history. We're voting yes, and we're encouraging members to do the same. So thanks very much for listening. Now, questions? To the lady here, I said that there'll be one of the commitments that we've made is no branch closures for 2 years, and you said what happens after 2 years?
Can I ask the lady to repeat her question?
Sure.
So we can all hear?
Might have forgotten.
No, well, I've remembered it.
Yeah, have you? It's to do with, will we all have to become more computer literate to do it all? Are you going to make it too difficult that, the likes of the elderly can't just do their regular banking and talk to people?
Yeah. So one of the things that's, there will be changes to the branches. And one of the reasons that we've said that we're not going to do any changes for 2 years is because we'll need the time to know what the branch of the future looks like. In some areas, we've literally got branches side by side. So it doesn't make any sense to have those two branches like that. But in some areas where we have, in some of the regional areas that we operate, we've literally got branches side by side. But in some of those areas are fairly significant growth areas. So that what we'll then do is look at, instead of having perhaps two side by side, you close one of those and perhaps move it to another area where there's opportunities to service customers, rather than having two side by side. The other interesting thing is, in talking what does the branch of the future look like? If any bank knows the answer to that, they'll keep it to themselves, but nobody knows the answer to that. And what will drive it is how customers' desires and what customers want. Interestingly, a number of our more senior customers, if I can use that, so that have been around walking this earth for a number of years. The interesting thing is, when COVID hit, a lot of those customers who used to go to the branch learned and became more computer literate, and they stopped actually coming into the branches. And there's data out there that shows that what happened with when COVID hit, the number of transactions, apart from when all the lockdowns are on, but the overall number of transactions that took place in branches went off a cliff, and they haven't actually bounced back. So people have, through a variety of means, have become more computer literate. And some of the things that will take place in the future, we're actually doing it now, where older customers come in and they say, can you show me, and this is one of the good benefits of our staff, that having that customer focus, where they're actually teaching and working with our more senior customers to show them how simple it is sometimes to do this stuff, and that actually saves them coming in there. So some of them might have, mobility issues and those sorts of things, or whatever, so that there will be a place for branches. There is no doubt about that. But what the branch of the future looks like, nobody knows at the moment. And we will take that time, we'll need that time to work out what the branch of the future looks like. And, it may well be that you have, sometimes our execs talk around pop-ups and things like that. So they're, rather than the bigger shop fronts that you see now, they might be smaller kiosk styles. There's all sorts of things when you look at some of the styles that are overseas and in the US and those sorts of things. So what the branch of the future looks like, that's why we'll need to take that time to see what that will look like. But there will be a place in the future for branches. Does that answer your question?
To an awful lot of change.
Yeah.
And in many respects there won't be. There won't be.
Okay. So we've got time for questions now, and Rob's got the roving mic. But sorry, I think Jeff, you want to say something? And Wayne, do you want to sit down?
Or did you want to sit down?
We'll
Yep.
do the. I'll try and be like Tony Jones or Stan Grant. Yeah.
Good luck trying to control us. Is that on? Can they hear that okay?
This one works.
It's.
While they're fixing that, we have a question from down here.
I can talk loud anyway. I was just going to say that. Okay, thank you. I was just going to say that to finish off where Wayne finished as well, that we are absolutely committed to branches. So this isn't, you're not going to find in 2 years' time we have no branches. That's what Wayne's trying to say. Branches will develop over time as to what they do, but branches and serving you, our customers, is a really, really important part of what we do and what we want to keep on doing. So we're going to develop new ways to make sure we can keep branches open for as long as possible, because it's a point of difference that we have to the Big Four as well. Engaging with our customers is actually really important to us because it's something we do really, really well. And those of you who are customers of ours know that when you walk into a branch of the Greater Bank or Newcastle Permanent, you get a big smile, and I'm sure the people who are serving you know your name and they know all about you and they can talk about your family. That's really important. So we value that, and we value the ability, your ability to be able to keep on doing that. We're not going to go to, from 100 branches, I think, between us at the moment to zero. That is certainly not the intention. And we will look at whatever ways we can to make sure branches are a very, very viable part of what we do going forward. So.
I'll direct my question to Jeff because I know more about the Newcastle Permanent. Jeff, most of the audience here, including myself,
It's
have got
Wayne,
grey
actually.
hair and an enormous amount of loyalty to the institutions. I suspect that many young people have got very little loyalty. They go to a broker, they don't care who the institution is. I know that you've, over the years, and I know some of them very personally, have had some very talented people on the board. So I have enormous respect for the organisation. However, as a customer-focused organisation, why don't you give us the choice to decide whether we want to be customer-focused or do an NIB? Offer us a bribe, give us some shares, and move on.
So a really good point, because we are not doing an NIB. We are not going to our members and trying to turn ourselves into a public company. And some quick background, many of you will know the NIB story, you know, maybe better than I. But NIB needed to expand, so they were going through the insurance industry was going through similar things. They needed to get scale. And NIB, instead of electing to merge with others or finding merge partners, decided down the path that they needed this additional capital and strength, and the best way to do that for their long-term future was to put themselves in the capital markets. So that's make themselves public, a public company. We don't need that. So we're not in a position, we're not short of capital. To go and make ourselves a public company would take away the very essence of all the things that make us great. So a short-term gain for members to turn us public and return some money or some shares to members would be the long-term demise, I believe, of both our organisations. One of the key things that I forgot to mention, what we are doing is merging. A merger of customer-owned organisations is not an acquisition. There is no capital leaves our balance sheet. So the beauty of a merger of two customer-owns is that we keep all the capital we both have and we add it together. There is no money leaving the organisation. We're not paying out money to a new owner or a buyer, or paying it out to shareholders or anything like that. Organisations just put their two balance sheets together. So we get this beauty of the capital of the Greater gets added to the capital of Newcastle Permanent. When we invest in technology, which comes out of our capital, we only have to do it once now. So we don't invest in the same things. So we actually get double the spend. That's the beauty of what scale brings to customer-owned. And we believe very strongly that all of those things that make us special are our commitment to the community, are about having a customer-first focus and not having a profit-first focus. So we very carefully manage, you know, our profitability to a target, because we've got an ability to give a lower rate of interest to our lending customers and a higher rate of interest to our deposit customers, rather than give that money away to shareholders. That's why we're able to deliver products that are cheaper than the big four banks. So.
Thanks, all of you, for your presentations. Normally Australians are pretty apathetic at voting, so my question is, has the organisations surveyed to see whether they're going to get much of a response from their members? And secondly, or part of that is, what percentage of votes do you need to actually get a decision?
Yeah, great question. It is one of the anomalies of being customer-owned. So customers, whilst Ross realised he got a letter and said, I'm a member, a lot of people think they're just customers. So when they get their member information booklet and say, I've got a right to vote, a lot of people don't realise they've got a right to vote, and because they haven't made a conscious decision as an investor that they're a member and a customer. So it is a major challenge to do that. But we will be sending, I've got the team here, we will be sending out, I would imagine, over 200,000 member information booklets to members. We have an extensive advertising and marketing campaign going on to ask members to vote, to look for these things coming out. We're starting next week. We will start to send out through our digital channels, through our online channels, through our branches, to alert our customers that this vote is coming up, and to when they get this booklet, to look out for it. This is really important for us. This is really, really important. We want as many members as possible to come along and vote and support it. That's what we want. So we're working really, really hard. It's a special resolution, so it requires 75% majority of those who vote is what's required to win the day. There's no minimum in terms of what that number means to get the merger over. There are some constitutional changes that are coming with the Newcastle Permanent changes as well to facilitate the merger. Changes to the constitution require a minimum number of members. So there's a minimum of 7,000 approximately. Looking at the boss over there, yeah, around 7,000 members for that. But outside of that, to get the merger across the line, we need a 75% of those who vote. But we are doing all things, both organisations, possible to get as many people engaged and voting as possible.
No, that's not working.
Okay, a suggestion for the branch of the future, or a version of a branch for the future. We have roving libraries in various parts of the country and this region as well, where libraries go around in a big van and turn up at particular places on a specified day. Well, I can improve on that. You have a large van with the bank at the front and coffee shop at the back.
Are you looking for a job in marketing? Great idea. Duan, you might like, I think one of your photos, was it one of your photos I saw or I've seen recently in America? They have similar things. They have roving vans that drive around to regional communities and do a number of things out the back of them. So, you know, there's people who are thinking about that at the moment and how they actually take the bank to the people rather than the people having to come to the bank. So.
There's a copy. There's a coffee shop in Kempsey, which is called the Vault Coffee Shop, and it looks like a bank that's been turned into a coffee shop, but in fact it is still the Building Society. But they also sell coffee. I didn't try either, I must admit. So.
A question for Wayne.
Yep.
Why did the Greater elect to become a bank? Why did it shrug off the Building Society concept and become a bank? And although I'm not a customer, I do have the impression that fees and charges went up when that happened. That may be wrong, I don't know, but that is my impression. And just on the branches thing, I understand the comment about branches alongside of one another. So, and you did use at one stage the word dual branch. So is the concept that you go into a branch and there's a kind of a booth for Newcastle Permanent and a booth for the Greater?
So a couple of things there. Yeah, so if I just go back to the start. So why did we change to or become a bank? We were, as you know, we were Greater Building Society, and we, like most others, we changed to a bank because people didn't know, particularly younger people, didn't have an appreciation for what a building society or a credit union was. Interestingly, a lot of market research, and Duan might want to comment on this, but many people, particularly younger people, thought that building societies had something to do with actually building physical buildings, and credit unions, they thought they had something to do with the union movement. So that was why, based on the research that we did, and all of the research that was available, that's why we changed to a bank, so that people, in particular younger people, would know what we were about, and that we were there to provide them with the financial services that they required. So that was that. In terms of Fees, look, I'd have to go back, but like all banks and financial institutions are looking at their fees and charges all the time. And that's just part of business and what you're doing, and it depends on the competition that's taking place in the industry. So, those things are subject to review all the time. Now, what was the last part there was another part that you...
Dual brand.
Oh, the dual brands. So, again, we've committed to keeping the two brands because we want to leverage those brands, and as we've talked about, we might do things like taking them interstate or whatever. As I said, we don't know what the branch of the future looks like, but that's one of the things that we are exploring around, and with our technology base, the ability to do those things so that you come into a particular branch, and if you want to do banking with Newcastle Permanent on that particular brand, you don't have to go somewhere, you just go to that particular counter, or if you're a Greater customer, you do the same. But a lot of that ability comes back to the technology platform and capability that you have. And that's why we've been talking about this ability to keep investing in the technology platform and capability.
No, could I just add to that as well? So, and a lot of people are unclear on that. Basically, all the Greater did was change their name. In calling themselves a bank, they did nothing more than change their name to a bank. So Newcastle Permanent could have gone to its members and called ourselves the Newcastle Permanent Bank. The reality is, as Duane said, we are banks, but we're a customer-owned bank. So having bank in your name, which is why so many of these mutuals are now calling themselves banks, like Great Southern Bank was CUA, Credit Unions Australia. They changed their name to Great Southern Bank. So just having bank in the name is what Wayne said. It's basically a marketing exercise because so many people didn't understand, younger people didn't understand that you provide full banking services. From the Newcastle Perm's perspective, we hadn't seen a need, and we actually sort of thought, Royal Commission and all things going on, do we actually want to be seen to be a bank at the time? But it's horses for courses, but they are customer owned. They are exactly the same as us, and going forward, we will be both customer owned. So.
Hello? Thank you for explaining the industry to us this evening and your need to look at these decisions that you're asking us to make and vote for. I guess one of the things that I heard was that you're going to remain customer focused and you're going to retain both brands. Retaining both brands, to me personally, is sort of marketing. It's like I've had accounts at both, and Newcastle Perm won in my boat.
What?
Sorry, Mr. Russell. And they still continue today to offer me services that a bigger bank won't. So I guess what I'm looking to understand is whether or not this brochure that's coming out also describes what customer services are going to be lost or are going to be considered. We know we're going to still have bank accounts. We know we're still going to have mortgages. But there are a lot of little touches that come out of your services that really make a big difference in our lives.
And Jeff will comment. Look, as we've said before, the way that you do your banking won't change. So that's not going to change. So the interaction that you have with the branch and our staff at our branches, that's not going to change. And that's one of the things that Jeff touched on, and I've touched on as well, that our focus on customers, that's one of the things that sets the customer-owned banks and financial institutions, sets them aside from the majors. It is that focus on customers, and that's going to remain. And you'll see that is in the member information booklets, which will come out in a couple of weeks. it will state that in there. Jeff, did you want to?
I think for our customers, what we're this overarching plan of what we want to execute and what we want to do is make sure that our customer base here sees no difference whatsoever. This is about a growth strategy. It's setting us up so that we keep doing all of the things and all of the services we provide to you today, that as soon as the merger happens, you won't see any change when you walk into the branch tomorrow or the next day. And we can keep that focus. And we're going to be able to do that by being able to expand beyond this market, out of this market. So the way we can keep doing all of the great things that you like about us and providing those quality services and quality products is to keep growing. There is no doubt, not in my mind. No, there's only upside in my mind. I don't. And from the customer should not see a difference. The customer should walk in day one of the merger and see no change. And I can assure you, even though my 94-year-old father is able to use the app now, he still has his passbook. So nothing's changing with the passbook whilst he's still alive, I could assure you. So, and for many people who love walking in with their passbook, so that service is still there.
Sorry, am I? Yep. That's it. Yeah. So we're changing all the levels, or Roger's changing all the levels as we speak. But we're almost out of time, but I did promise my son that I would ask this question. So essentially we're talking about this, and he's in the business world of sorts, not in Newcastle anymore, but said rather than expanding geographically, you should be building on your best asset, which is the public trust, and building on that to become a financial concierge service and take on other services in finance, such as he was talking about superannuation and just investment advice, rather than just banking services that you do at the moment. I did promise him I'd ask that question.
I don't know whether Juan wants to talk about what the industry is doing in that space first.
Well, actually, I had a slide that I didn't show everyone, which was the potential future branches, the future that the two merged entities could go into. But whether the merged entity goes into digital banking, so the fintech area, that's one possibility. The other one will be, recently you would have come across articles talking about buy now, pay later kind of new fintech, so that's another area. Obviously, superannuation and other established areas will be something that the two banks could go into. But once you go into the superannuation or other sort of financial services area, you have to be careful who you're serving. Are you going to go to the national customer side or just the regional side? Because there might be not enough customers in terms of financial services in need or in superannuation in need. So it will mean that the merged entity will need to go elsewhere, which would divert the resources. So in the long term, it could happen, but in my view, in the short term, it's better to consolidate within the region and try to see what kind of synergies could happen. I just wanted to make a comment on the dual branding. Dual branding in the business side is not very new. Does anyone drive a Kia or a Hyundai? Do you know that it's owned by the same owner? It's the same. Likewise, St. George is owned by Westpac. They're dual branded, right? So a dual brand will not make a significant difference to the customers.
Yeah, so he's done a really good answer to the question. It's not part of our business plan at the moment. We excel at what we do. The reality is we excel at what we do, and the ability to take something that you're really good at and expand geographically is a whole lot easier than moving into new areas, even though they're related in terms of finance. So we believe we have great opportunity. We have plans to start to deliver digital mortgage product as early as next year. So to enter that $100 billion market and play in that space and attract additional revenue. So we have plans, we have in our business plans going forward. We've got to develop our strategy once we get a yes vote and formalise that, but we have plans for growth, and they're really good plans for growth. And things like superannuation or associated giving advice is areas that we're not strong in or we don't do at the moment, and to simply move into that space now, probably we don't have the resources or the energy. We're going to focus our energy on the things that we do really well.
Well, I hope so, because I'm going to get a superannuation payout before too long, and I would be much happier. Not much as we're an independent, this is me personally, not the Newcastle Institute, but I would be much happier going into one of your branches and putting my superannuation with you and taking advice from you than with ComSec. Anyway, I'll ask Rob to finish.
Ladies and gentlemen, would you please join me thank Professor Dewan Lee, Wayne Russell and Jeff Ether. That was really fascinating. I'm really pleased to see what's happening around the rest of the world, Dewan, and to see that we're following. I think it's a truism to say that companies that don't adapt die. You just have to adapt to new circumstances, new times, new ways of doing things, new ways of thinking. And so I actually congratulate you on taking the initiative to actually do something rather than wait for something to actually force you into a situation. So thank you. Thank you very much, all three of you. We have an exciting program over the next few weeks. Next month, Professor James Curran, who's the Professor of History at the University of Sydney. Some of you may remember Bernie Curran, who was one of our patrons of the Newcastle Institute. James is Bernie's son, and James has had a stellar career in international politics and he's written a book providing a more nuanced view about Australia's relationship with China. So that will be a really fascinating chat to have a talk with James. The following after that is Professor Michael Undarchi, who's a Professor of Politics and Head of Arts at Griffith University in Queensland. Michael's a regular speaker. Some of you may have been here to some of his most entertaining addresses before. He will be talking about the American midterm elections, and that's his area of interest and speciality, the whole American phenomena, and how it impacts on us here in Australia. And he gave an address just a few years ago now on what he titled the Trump phenomena. And that was really quite a fascinating insight into what was going on in the United States and how that may impact on us here in Australia and indeed the rest of and it has. And we're very excited also in November to let you know that coming to speak to you is the Honourable Kevin Rudd. Kevin has agreed to come, and he will be talking about Australia's relationship with China. There's been a lot of discussion about that, and we're trying to just pour a little bit more light and a little less heat on that discussion and of our relationship, Australia's relationship with China. That will be on November 22nd. But just keep an eye on the website. Yeah. That will be on our website. Just keep an eye on that, because that's we're doing that because we won't be able to cope with the numbers. We're doing that in conjunction with the university, and it will be held during the day and not of an evening. And so you'll just need to go onto the website and click a button to reserve your spot. So thank you so much for coming. Can I also just apologise for our sound problems? I've got no idea what's going on with these microphones. Anyway, I appreciate your patience and your understanding in that. So thank you very much and good night.